Good afternoon, everyone, and welcome to the 7th e-agricom webinar held on the 22nd of June 2022. We would like to thank InstaPro International, ChemVet Products Incorporated, and Ensign Laboratories Incorporated for sponsoring this event. Our first guest speaker has been providing consultancy and training on price risk management and commodity derivatives trading both in the Philippines and abroad. He is currently the President and Chief Trading Officers of SME Commodities Incorporated, a company that operates 2 COPRA oil mills and supplies crude palm oil, palm olein, coconut oil, soybean oil, and COPRA cake to the feeds and livestock industry in Luzon. He has been registered with the Commodity Futures Trading Commission of the USA. He passed the USA National Association of Securities Dealers National Commodity Futures Exams and NASD Series 30 Futures Branch Office Manager Exam. He traded agricultural futures and options contracts in Chicago and New York markets. He was a California branch manager of ADM Investor Services, a futures commission merchant in Chicago, USA. Our speaker is an expert on candlesticks, price charts patterns, and wrote technical market analyses for an online trading company on the Bursa Malaysia derivatives, crude palm oil, futures contracts. He is also an avid watcher of the El Nino/La Nina Southern Oscillation weather phenomenon. He is a graduate of UP Los Baños College of Agricultural with a Master's in Business Administration degree. He has a working knowledge of feed ingredients and animal nutrition. Here to talk about situation and outlook of selected feed raw materials, let's welcome Mr. Red Galura.
The debt to GDP, public debt to GDP ratio of the Philippines is about 63.5%. It's the highest in 17 years, brought about by the response to mitigate the pandemic effect of the recent pandemic. So we were borrowing heavily and our GDP slowed down. The threshold debt to GDP for developing economies is about 60%. So we are a bit higher at 63.5. The Monetary Board may raise the Bangko Sentral policy rate by about 50 basis points tomorrow. They have a meeting tomorrow and again on August 18th. On August 18th, I expect them to raise by another 25 basis points, bringing the total increase for the year by 1% because we were at a record low of 2% as late as May 18th. The Bangko Sentral raised their policy rate by a quarter point last May 19th. So we're looking at 3%, which is still relatively low compared to the previous interest rates of the Bangko Sentral. We're looking at a forex rate of 54, but actually we already touched 54.60 today, exceeding our expectation of 54, but this 54 is an average. So the implication is we will go below 54 again sometime in the third or fourth quarter to have an average of 54. What are the supply risks? So on food protectionism, we recently saw how Indonesia banned their export of palm oil, creating a shortage worldwide. They recently lifted their export ban, but there are supply chain bottlenecks. So it will take time before the Indonesian palm oil supply reaches the consumption centers or destination countries. Malaysia also banned their export of chicken to Singapore. India banned their export of wheat and sugar, and Vietnam and Thailand are reportedly also planning to ban their export of rice if they haven't done so yet. Argentina also raised their export taxes on soybean meal and soybean oil. We have had supply chain bottlenecks, so the freight costs have risen by 3 times to 5 times their previous rates before the pandemic. This is due to the congestion at ports brought about by the pandemic. We also have experienced high fertilizer prices, which have implications on agricultural production and cost of the agricultural produce. So these are the supply risks that a purchasing manager or trading officer will have to look into and explore how to mitigate this risk. The US dollar index is weighted about 50% against the euro and the balance of 50% against other major global currencies like the Japanese yen, 15%, the Aussie dollar, the Canadian dollar, and the Norwegian kroner. So the uptrend for the US dollar is intact, meaning that the value of the US dollar has been rising against the major currencies. There was an upside breakout on the technical side. There was an upside breakout on the value of the peso. We were expecting it to hit 53.80 because when I was preparing the slide, we were only doing about 53.50 to 53.70. But we were saying that we have a strong chance to overshoot 54, which we did already. Today we hit 54.60. We were previously doing sideways. When we broke out of the sideways band, previous sideways band from 52.10 to 52.60, that was the indication that the value of the dollar will rise and the peso will depreciate. The first target was about 53.60 to 53.80. If we breach 53.80, we're headed to about 54.50, which we already touched or actually exceeded today. After 54.50, the next target is 55.50 or 1 peso higher. But we expect the peso to rebound instead of having a runaway value of the dollar. We're still expecting an average of 54 for the second semester. This is just a weekly chart showing you the historical value of the peso. At one point, we exceeded 56 to 1 and then recovered to below 40, I think 40.30, thereabouts. Why is the peso depreciating? The Japanese yen has been depreciating sharply, and this is influencing the value of the Chinese yuan and the Philippine peso. So the Chinese currency and the Philippine currency are under pressure to align themselves with the depreciation of the Japanese yen. With the lower value of the Japanese yen, the prices of Japanese-made products will be cheaper to the world market. So the Japanese are trying to work their way out of their economic slowdown by depreciating their currency and in turn encouraging exports. So look at the value of the Chinese yuan. It has started depreciating recently after appreciating since the start of the pandemic in sometime in March 2020. The Philippine Stock Exchange is an early indicator of what the Philippine economy will do in the next 3 to 6 months. So since the Philippine Stock Exchange Index is moving lower, the outlook is that our economy will also slow down. So the Bangko Sentral has actually lowered their GDP target for the year from 7 to 9% to about 7 to 8%, while my personal view is 6.5%, a bit lower. Notice the pattern of lower highs for the index. So that is an indication of a downtrend. So we have the high, lower high, lower high, lower high, and another lower high. We also have lower low, so low, lower low, so lower low, another lower low, and another lower low. So this is an indication of the downtrend. It's a pattern of lower highs and lower lows. We now move on to oilseeds and vegetable oils. But first, since we're dealing with agricultural commodities, I'd like to share with you a chart from Oil World about the ample moisture that the Philippines has been receiving since October 2020. This bodes well for Philippine agriculture, notwithstanding the high fertilizer prices. I'm a bit optimistic on production because of the good moisture, because a lot of Philippine agricultural lands are not irrigated and rely on rainfall for their moisture supply. So we have ample topsoil and subsoil moisture. The ample rainfall bodes well for very good production of copra, coconuts, and coconut oil. If a coconut tree receives ample moisture, expect that 12 to 13 months after, it will have more nuts, bigger nuts, and thicker coconut meat. But if it is stressed, or it suffers moisture stress from, say, a dry spell, expect that 12 to 13 months after, we will have less nuts, smaller nuts, and thinner coconut meat. The implication is we will have less production. But since we have ample moisture, we expect better production of coconut. I will share to you the chart of Rotterdam coconut oil. The prices have been declining sharply, but we have a recent rebound. This is just what we call in technical analysis, just a corrective bounce. But the downtrend will resume shortly. In fact, it has already resumed. So with better production prospects, the supply and demand fundamentals for coconut oil hint at more weakness ahead. Our view is that the corrective bounce, the short-term rally the past 3 weeks, has run its course, and we are poised to resume the downtrend. The tight physical local supply of palm olein has provided some support to coconut oil prices. With the short supply of palm olein, prices are somewhat supported. But with the cheaper palm olein in the pipeline coming from Indonesia, we expect coconut oil to follow lower. Just to remind that about 2 months ago, we had an export ban of palm oil out of Indonesia. For copra cake, we recently experienced a tight supply of copra cake, but for us, it is not surprising because it is a seasonal trend. So every May and early June, we have a tight supply of copra cake. Copra cake is the solid residue after crushing the copra and extracting the oil. The solid residue that remains is copra cake. There is another type of production called solvent extraction, which is the process used in extracting also soybean oil from a soybean meal. The byproduct is another type of copra. We call it a solvent extracted copra cake or copra pellets or copra solvent pellets. That type has a higher fiber content and lower coconut oil or residual oil content. So COPRA EXPELLER CAKE is more nutritious and it's geared more for monogastric animals like hog and chicken, while COPRA pellets or solvent pellets are geared more for ruminants like dairy cattle. So the key takeaway today maybe will be this chart. It will provide you a seasonal guide in buying your copra cake. So the best time to buy copra cake will be from maybe August, September, and October in preparation for the higher prices in November and December. Then followed by another dip in March. So the time to buy for your April and May and early June requirements will be sometime in March. So that's how you use this seasonal chart. For crude palm oil, the sellers have taken control of the Bursa Malaysia derivatives crude palm oil futures market. The fundamental basis are the resumption of Indonesian exports after the export ban and better global production in the coming months with the seasonal high production in August, September, and October. Local palm oil prices will follow global prices lower, but not immediately, but as soon as the supply chain bottlenecks brought about by the export ban ease. Notice the sharp drop in prices from the first week of June all the way to today. No? So it's a very big drop. And our guide here is the 20-day moving average line. As soon as we fall below this 20-day moving average line, that is an indication that the sellers or the bears have taken control of the market, and we should act accordingly. So if the prices are falling, so it's better to postpone buying or do just-in-time buying for our raw materials, particularly this one, palm oil. So the key is when we break the 20-day moving average line to the downside, that is a sell signal. For US soybeans, supply of old crop is very tight, but record area is planted for the new crop. They just recently finished planting in the United States. Planting in the United States is sometime in May and early June. While for the Southern Hemisphere, Brazil and Argentina, they start planting as early as November because they have a very big area planted for soybeans from the Mato Grosso area all the way down to Buenos Aires in Argentina. The crucial weather is the July 25th to August 10th Midwest weather, which is the pod filling stage. This is the most crucial weather for August soybeans. Since we have a very lean inventory in the United States, prices are elevated. But the bears have taken control of the market recently. Market dropped sharply the past 2 days because weather premium was taken out due to cooler than average temperature forecasted in the next 2 weeks for the United States Midwest. But we're in a US weather market today, so the weather can change anytime. Chicago traders typically kill the soybean plant 3 times in its growing season. First, during planting, because soybeans do not want too much moisture on planting, so the traders try to drown it with more moisture. So every time it rains, so the traders try to exaggerate the rainfall. And after that is the pod filling stage. During the pod filling stage, the soybean plant needs a lot of moisture. At least 2 inches on the weatherman's rain gauge during that critical period. And the soybean plant also do not want hot weather during that time, but it is the height of summer in July and August in the United States. So the Chicago traders try to exaggerate the high temperatures. They say, oh, it's too hot, but it's summer. But they try to exaggerate that. So first, they try to drown it, and then second is they try to burn it through hot weather. And finally, they try to freeze it during harvest, because soybeans do not want a hard freeze during the harvest season, because the beans will crack and they will be downgraded to US soybean number 4 or even just thrown away if the soybeans crack on a hard freeze, if there is a very early cold weather, because that's already in autumn or fall in the United States. So watch out, the Chicago traders will try to kill the soybean plant 3 times. So there will be a volatility in prices during the growing season. On soybean meal, same thing. The crucial weather is the July 25th to August 10th. On the technical chart, the highs are getting lower, an indication that soybean meal prices are moving lower. And we recently, last night, we moved below the 20-day moving average line, hinting that soybean meal prices are about to move lower, and the sellers have taken control of the market. But note that it's very close to the 20-day moving average, so it's possible that it can move back above the 20-day moving average line. For soybean oil, again, the sellers have taken control. Note that we're too far away from the 20-day moving average line, so it will take some time before we move back. So the sellers have taken strong control of the soybean oil market. So together with palm oil, soybean oil prices have been declining. For Chicago September wheat, same thing, the sellers have taken control. The bad supply news that have been thrown to the wheat market have been absorbed already. So the Ukraine supply disruptions, Russia will have a bumper crop of wheat. I think they anticipated already, so they planted a lot of wheat in anticipation of the high prices of wheat, because they know that they will attack Ukraine. So the bad supply news has been discounted, digested, absorbed, or baked in the price already. So it's already in the price. And from the technical side, I see a head and shoulders pattern, which is a negative chart pattern for wheat. Since we're in the PHM livestock industry, so I look at the European feed wheat November futures contract. It's the same thing. From a peak, we have traded below the 20-day moving average line. So the sellers are already in control of the market. But we are in a pivotal area today. So if we move lower again tonight, that will confirm the breakdown of soybean prices, wheat prices, feed wheat prices. For corn, US corn, again, the bad supply news have been absorbed already. But the crucial pollination weather is coming up. Corn needs a lot of moisture during this critical pollination weather. So the corn crop has yet to be made, or has yet to be to have a good production. If we lack moisture during the pollination weather, what I call the seeds, bungi-bungi yung seeds ng corn cob, hindi buo yung mga seeds niya, bungi-bungi. That's because during the pollination weather, it was subjected to moisture stress. So that's my presentation for today. Thank you to e-agricom again for the opportunity to be with you today, and I'll be ready to respond to your queries later.